Okay, I have two short clips for you. First one is they're both connected. The first one is where this Shane Oliver of AMP Capital, is the economist, is always on TV. He speaks well, eloquently, and he rightly so points out to the fact that the interest rate level is crucial to the Aussie housing. So if that goes up, that could derail continued housing growth. Now, what he's also saying, what we also know, is that 1/3 of borrowings that Australians take on are obtained from overseas. And even if the RBA doesn't lift the rates, or doesn't, even if it reduces rates, the problem is that 1/3 is borrowed from the overseas money markets, and we know that the overseas money markets, the interest is going up, the Federal Reserve is jacking up the rates. So he makes a few other points, but then the second clip answers his question, and it probably clears out what is likely to happen. Watch this.
See the trigger for a property crash in the economy. So you need to see much higher interest rates causing debt servicing problems, or much higher unemployment. So it's hard to see those things. So yes, the risk is there, and yes, we need to keep an eye on it, but by the same token, it's not necessarily going to happen in the next few years. We have very low interest rates. That's driven investor demand. It's driven owner-occupied demand, people trading up, and also foreign demand is quite high. So I think they're all playing a role in all of this. But the OECD is also right to allude to the lack of supply in the Australian market. That's been a big factor over the last decade. We're now starting to address that. Unfortunately, it's all in apartments. We're not seeing a lot of single dwellings, not as many single dwellings as we need. But I think that at the end of the day, you've had very strong demand for housing and a lack of supply, and that's the core issue here.
The good old dead horse that they're flogging is the lack of supply, where we know, and I've created videos where that's been debunked. There is no lack of supply. There's actually an oversupply, but that's a different video that you can watch that I made. I think Roger Montgomery made some very good points in that video. I might even link it in the description, so take a look. But this is where his speculation actually gets answered.
Today, the head of Australia's biggest bank faced a grilling by federal politicians and, like the RBA governor, faced tough questions on housing affordability.
I think they're saying it's difficult to afford it, and we share that view. And to what I said before, that should be a matter of national concern, and it certainly is to us.
But if global rates rise, house prices could come under downward pressure.
If we're past the low in interest rates, then it's probably fair to say you're getting very close to the peak in house prices.
The old maxim is don't fight the Fed, and every analyst and the RBA will be keeping a keen eye on Yellen and co.
The focus really then turns to not what are they doing next month, but where do you think the Fed are going to be in 2 or 3 years' time?
And that's what really matters for the Australian economy.
And the Fed has clearly indicated that they want to raise the rates. So, I don't know. Let's put 2 and 2 together.